Hello and welcome back to the Note. Well, trading is over on Wall Street for the day, and it's been another quiet and rather dull day, everything within its ranges. Of late, the S&P up slightly for the day, Brent crude slightly worryingly back below $50 per barrel. Not only has it been a quiet day, it's also, for the US stock market at any rate, been a historically quiet year. This chart, which was provided to me by Thomas Lee of Fundstrat, compares how the Dow Industrials has done so far this year compared to the only previous year in which it was completely flat for both the first and second quarters, for which you have to go back all the way to 1904. And you can see in that case the extremely flat first half was the prelude for a dramatic rally in the second half, which has certainly not begun to happen yet this year. We are on course at the overall level of the market for a historically flat and dull year. What's worrying, however, and what might imply that we're not on course for a rally like in 1904, is when you look below the surface. If, for example, you take a look at it in terms of styles, investment styles, you'll see that value has radically underperformed growth as measured by the Russell indexes. In other words, people aren't particularly interested in cheap at this moment. They just want to see that companies can demonstrate some growth. That tends to be something you see towards the end of a bull market, you'll be concerned to hear. Or if you take a look at sectors, note how the industrial sector, arguably the most cyclical that there is, the most exposed to the economic cycle, has dramatically underperformed healthcare, arguably the most defensive sector. We all need healthcare at all the time, regardless of the state of the economy. Again, that implies that the market is trading on the belief that the economy is not in good health and is arguably therefore also fighting the Fed, given that the Fed thinks that it's time to start raising rates. Now, we'll have a lot of new information over the next 2 days, which should make life more interesting and should also give us a better idea on whether the Fed is going to raise rates. We have central bank meetings from the Bank of England and the Bank of Japan, followed by a welter of unemployment data here in the US. But for now, not only was this a rather quiet and boring day, it's been a historically quiet and boring year for the US stock market, and that is cause for some concern.